Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for the Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the July 11th fantastic Friday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a terrific Thursday. Let's make sure that we do all that we can do to have a fantastic Friday and an extraordinary weekend. Welcome to all our new listeners and viewers here at Tiger Financial News Network. As we like to say here at TFNN, welcome to the Hotel California. Because once you check in, you'll never check out, folks. And why would you want to check out? After all, you've got access to 9 hours of live programming with extraordinary technical market analysts, each providing their own opinion, their own ideas, their own analysis of where the markets are headed to. That's a cool thing. We could tell you just where they're at, but that's not so much fun. We like to tell you where we believe that things are headed to. So whether it's an individual stock, whether it's a commodity, a currency pair, whatever it is that you might be trading, tracking, or what have you, our show is a two-way communication. You're welcome to always give us a call at 877-927-6648. Happy to take your call out there. And for the next 2 hours, I'll do everything I can to teach you how to master the tools of trading. That includes using patterns like A to B equals CD patterns, Fibonacci expansions and retracements. The combination of those two are what form the Gartley and the butterfly patterns out there. So I'll be happy to do that. And one of the most important things for us to do is always to think like a strategist. And that's why I like to use Japanese candlestick charting as well and integrate that into the charts that we are taking a look at. Folks, this is Tiger Financial News Network. This is Fantastic Friday. I'm Steve Rhodes, and welcome to the show. Let's get things kicked off out here right now. Not much going on in the futures markets. We've got the Dow futures up. Well, they're flat. They're exactly flat. They're trading at 16,840. S&P futures up a half a point. That's traded at 1958.50. NASDAQ futures up 7. They're trading at 38.80. King dollar up 6 pennies. She's trading out at $80.23. Goldilocks. Gold is back $2.60 right now. It's trading at $13.36 and a little bit of change. Silver down 3 pennies, so a flat session out here. That's trading at $21.47. Light sweet crude back 76 cents right now. That's trading at $102.17. A quick peek across the globe. We're going to find that over in Germany, the DAX here, that's trading up, that's flat. That's down $1.73. FTSE is up 9. In Asia last night, you had the Nikkei off 52 points. The Hang Seng down 5. That's a flat market. Shanghai was up 9. Again, our call number is 877-927-6648. Give me a call, folks. Happy to take a look at your stock chart. So where do we begin the day? Where do we begin the day out here? Let's go take a look at especially if you're a new listener out here. I'm going to go take a look at the chart of the Euro-Japanese yen. Of course, all of you know that that's one of my favorite currency pairs to look at. Reason being is because it tracks the U.S. stock market better than anything else. So here's the daily chart for the Euro-Japanese yen. Yesterday, we saw this thing really moving lower. Of course, that began moving lower at about 2 o'clock yesterday in the morning, and that began moving markets lower. I know it's all blamed on banking issues or what have you, but all we really got to do is, when I take a look at a stock chart, here's the thing about a stock chart, and the cool thing about technical analysis. Weeks from now, we're not going to be able to look back at this trading session on July 10th, yesterday's trading session, seeing that wide-ranging bar moving down, trying to bust out both the .786 Gartley buy pattern, as well as take out the most recent area where the bulls were defending territory out here. So we're not going to remember the news. We don't need to remember the news because the news is incorporated right into what the price patterns are that are going on. What we can see here right now is price was moving down lower. Yesterday on an intraday chart, if I just flip over to that, meaning a 120-minute chart out here, what we know about the Euro-Japanese yen was that it was in the extreme sold condition. That's using a 14-period relative strength indicator out there. In order to work off that condition, it's just simply moved sideways for the most part, just simply bounced a little bit out here, just gained enough strength to maybe take out those lows today. Maybe it's not today. Maybe it is Monday. But it sure looks as if what the Euro-Japanese yen wants to do is move lower. And if that's the case out here, that says that the next target for this currency pair ought to be the bottom of its rising price channel. This is coming back all the way into the 2012 timeframe. And this is important, folks, because you really do want to understand what's going on inside of the currency markets out here. So as we begin our day, yes, it has not broken out the bottom there. We knew that. I know that was going to be strong level of support. But there's not anything here that indicates to me that the Euro-Japanese yen doesn't want to take it out. So whether it's today or whether it's Sunday evening or early Monday morning or maybe it's Tuesday, Wednesday or what have you, until we see some kind of reversal out here in this currency pair, this is providing us with a message of huge caution in the markets. Now, it's a directional indicator. So it's not going to be able to help us identify tick for tick or anything along those lines where things are going. If we take a look at, and this is coming to the end of the week, so we're going to look at a number of different charts out here. But let's go take a look at the daily time frame for the 4 different futures indices that we like to follow. You've got the ES Mini, S&P futures. That's in the upper left-hand corner. Upper right-hand corner is the Dow futures. Lower left-hand corner is the NASDAQ futures, Russell 2000 in the bottom right. Let's go start with the strength in the marketplace. Let's take a look at the NASDAQ futures. If you are new to TFNN, you're going to, new to my show, what you're going to be taking a look at on this E-signal chart, you're going to take a look at the TAS signal boxes. This is a daily chart, again, that we're taking a look at. These TAS signal boxes, these market profiles out there, they really help us to identify areas of support and resistance. They also really help us to identify when changes in trend are taking place. Take a look, as an example, coming back here off of lows back in April 15th. Price got back inside its range, inside of its box range. I don't know what else. That's really what we'll refer to it. The green lines are the support levels. Red lines are the resistance areas, and the blue lines there, really the area that price is most comfortable with. It's called that point of control. It's like getting to an intersection where you know you're going to have traffic. Once you start to clear that traffic area and you head higher or lower, there's just one more hurdle that needs to be crossed. In this case here, coming off of the lows back in April, you can see that once price broke above the resistance level out here, support held all the way up. That's why it's important to be paying attention to what these support levels are. And right now, inside of the NASDAQ, the number to be focused on is 38.6640. That's the low. A close below that today doesn't spell curtains, but it tells you that the NASDAQ on a daily basis is trying to change its trend. Now, if it does that on a daily basis, where is it likely to head to? Well, if we take a look at weekly profiles, that's just one element. We'll take a look at retracement areas as well. Now, in fact, I'll do that here on the weekly chart, so we put all that together for you. And if we take a look at where price is likely to head to, well, old resistance should become new support. Of course, we don't know until that level gets tested whether it is or it isn't. In this case here on the weekly chart, once price broke above the unfair high, the resistance area, by the way, that was May 19, 2014. That level is 36.6055. That's another number that you want to go ahead and write down on a pad of paper. That is likely to be the price level that the NASDAQ futures will travel to if on a daily basis, or when on a daily basis, they're able to crack that level of support. If we take a look at retracement levels, if we go from low to high out here, what we're going to find is that the retracement area, the dead cat bounce point 382 says 37.17. Hey, folks, the NASDAQ futures pulling back to 35.96. Still in a nice bull market out there. 877-927-6648, folks. Give me a call. Oh, wait a minute. Here I was on the wrong show host clock out there. No wonder. Let me put it over here to Stevie's son. There we go. I got 3 minutes out here. Sorry about that. Now, all right. So on the weekly chart here, just pulling back a normal retracement to the 0.618 area. No problem out there. So that's what's going on inside of the NASDAQ. Let's go do the same thing here with let's go look at the Russell 2000. So let's take a look at the Russell 2000. Russell 2000, we're going to start here with the daily chart. As we take a look at the daily chart out here, we're going to see that it already has changed its trend. It has changed its trend. It's changed its trend by getting below the support level. That's at 1175.02. This chart here, because of the way that I have to stitch together, not myself, but the folks at TAS Signal Box, the way that we have to stitch these contracts together to be able to provide you with accurate market profiles, forces us to create a phantom symbol out there, and that means I don't really have the live feed, so price is going to be just a little bit different. But here's what I do know. I know the Russell 2000 not trading up above 1175.02. If it does close above that today, that would, let's see what the weekly chart says. On the daily chart, that would start to say, hey, maybe this market is not going to go down much further. I don't suspect that is really the message of the market out here. When we take a look at the weekly chart, though, just give you an idea what those market profiles are as well in the Russell. You can see that resistance has not been able to have been taken out. That's the red line that's going across my screen. The point of control, the area where it's most comfortable, where it would be normal maybe for the Russell to hang out today, get down to about the 1131 area. Of course, that's about 25 points lower than where we are at. The Russell 2000 on a weekly basis out here, if she closes below 1097.70, folks, and really you'd have to say if it closes below the swing point from May 12th out there, both the May 12th and the February 5th area, we'll use February 5th since that's just a tad lower. And that price level is 1069.90. Then we would see a significant, I do mean significant, change in trend out there. So that's what's going on with the Russell. Let's take a look at the ES. Let's look at the S&P futures. S&P futures are what? So now you've got the Russell below its unfair low. You've got the S&P futures right now below its unfair low as well. That's at 1961.45. You see, we can see the change in trend that is trying to occur out here inside the marketplace. That's on the daily. So the daily is moving into, it's saying from a daily, if you were a daily swing trader, the message at the moment, as we speak at 9:19, is long might not be the right move. We look at the weekly chart real quickly here. We'll give you the old resistance area. That should become new support. Hey, that's way down below. That's 1846.50. 877-927-6648. This is TFNN. I'm Steve Rhodes. Welcome to the show. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Not much change in the markets out here as we speak. Let's go take a look at some things that are popping and dropping here in the pre-market. We have Lorillard Inc. LO is a ticker symbol. Let me see here. What's the news behind the move? No earnings that I see out here. But let's go take a look and see what it's doing. Closed out at $63.09. Trading up about $3 right now in the pre-market at $66.07. So let's go take a look at Lorillard. Let's go see what it's going to do. Dealing with its swing point high out here at $65.28. So trading above its most recent swing point. That's from the trading session on June the 20th out here. Let me pull this back a little bit. See if this is a nice looking chart for sure. Let me put the weekly time frame on this and see if that's see what kind of volume we've got here for the week. So it's going to try to trade above a swing point. Let's see, the high out here. This thing got a nice sign of strength way back on March 3rd, 2014. That's its last breakout. If this equity ever does fall out of bed here, fall out of favor, I should say, that's the area that you're going to be watching for price to pull back to. Anywhere between 56.85 and 49.76 out here. So most recent swing point highs, doesn't matter, it's been clustering up here. It's in on the weekly basis, been in bullish mode ever since the week ended June 16th out there. And volume 12 million on that day, 12 million the next week. Last week was 9 million, of course, a shortened trading week at 11 million already. So it looks like this is going to bust out to the upside out here today. And let's take a look at the A to B equals CD pattern. Now, to do that, we're going to come all the way back to the swing point lows. I'm going to say the real swing point to use on this pattern. You'd come all the way back to October of 2012. That would be our A point. Our B point up here is going to be the trading session from November 18, 2013, and the C point down here on February 10th. And you can see it's already beyond the 1-to-1 A to B equals CD, but that was really a given inside of this equity because the retracement here on the weekly basis was relatively small, less than 50%, and no real volume or anything like that to the downside. In fact, it had a nice breakout session, as I mentioned, the week of March 3rd. So the price level where it's going to head to, it says the 1.272 on the weekly is 67.56. I believe it's not trading too much below that. Out here, let's switch back down. So 67.56 is likely where it is headed to. It's traded at 66.10 out there. So I would suspect that once it gets up there, it ought to stall a bit. That is on Lorillard Inc. You've got Westmoreland Coal. WLB is the ticker symbol. It closed at $37 even Steven last night. It's trading out at $37.55. You've got Nordian Inc. NDZ. is the ticker symbol. That closed at 12.45. It's trading at 50 cents, right around 12.90. To the downside, we've got Sandy Koufax. Koufax Limited is the ticker symbol, KFX. Closed at 8.08. That's down hard. That's down at $6. Let's go see what that is going to attempt to do. This is, looks like they're out with revenue out here. I just have the range of revenue, 287 to 290 million out here. Looks like that is below estimates, and therefore it's a pretty substantial hit in the pre-market. That is Koufax Limited. KFX is the ticker symbol. Well, this is not good. This looks like a IPO here that came out back in December 2nd. The high of that session, 850. Low of that session, 650. It's going to go test those lows. Now, on a daily base, there was a little hammer candle right here from May the 12th, and that's an important level, 641 for it to hold. And it looks like in the pre-market here, it has not broken through that area. But if it does, that portends a much lower price. Now, don't have enough data here to really tell you where that would likely be. But watch that low out here. This thing had some volume off of the high, so it already gave us a signal back on June 23rd. There were 13 million shares off that high. Whenever you see volume coming off of a high, that's a pretty good indication that you've got some institutional selling out there. Normally, you've got distribution for a while. We don't have that in this case here. We just know that folks were dumping out at the highs out there, and they must have known something because those highs were anywhere between $9.21 and $8.60 out there. Right now it's straight out at $6.60. So always have your first eye on volume, your next eye on the swing points to get an idea where price is going to move to. You've got Magic INVT. Boy, I don't have the name of the company out here. I can tell you it closed at 9.25. It's trading down at $8.02 out here. You've got Genworth Financial, GNW is the ticker symbol. That's trading right now at 16.03. That's going to open up a buck. That's going to open up below its support level, which it hasn't done here for quite some time. That support level of 16.58. 877-927-6648. This is Steve Rhodes from Tiger Financial News Network. Great to be with you, folks. This is Fantastic Friday. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 3 points. Trading out at 16,918. S&P is flat up 80 cents. NASDAQ Composite up 10, trading at 4406. Russell 2,000 off a point right now. Trading out 1160. Let's go out to Windsor, Canada, to Suzanne. Suzanne, thanks for calling. Thanks for holding. How are you this morning?
How are you?
Excellent, excellent.
Nice
thanks
to
so much
hear
for
your
calling.
Voice.
Thank you, thank you. Tell me what you wanted to look at. What?
GDX.
Okay. And,
gold miners?
I'm sorry?
Gold miners?
Yes.
Would you find this a good spot to get in? I'm not in it, and I was wondering if it would be okay to get in here, or do you expect a little more retracement?
Well, here's what we've got. So I've got the GDX. I've got the daily chart for the gold mine, the Philadelphia, replicating the XAU in essence out here. So it's the GDX. And what I would tell you this, Suzanne, is that yesterday this formed a little bearish candle formation out here. And today's makes today's trading really important. It created a little key reversal session, a little bearish engulfing, dark cloud cover, depending on which chart you're looking at, whether it's the XAU, the GDX, or what have you. So there's a little cautionary sign that is present. Now, it did take out a B point, a swing point. That I'm looking at is the June 24th area. That had a high of 47 million shares, and that was taken out with 45-ish, 56 million shares yesterday. So it does have volume over that swing point. The problem is that key reversal session. So my answer to you would be you've just been given a warning sign. And we really need to see, especially since you're not in it, we really need to see how price acts over the, at least today. Maybe today and Monday. If it pulls back, because your question was where's a good place to get into, what I would be looking at is I would be looking at the June 19th and the June 18th area. June 19th has had nice wide price spread, accelerated volume, and that volume there was 79 million shares. And the question becomes, so if you're looking at this from an intermediate, longer-term standpoint, if it does pull back, if it's pulling back on light volume, specifically mean less than 79 million shares, wait to see what happens when it tests the high of that trading session from June 19th. That's at $26.10. If it tests that and it rejects that, then maybe that's a spot to come in. The better spot to come in on this equity is at 20. $4.78, and this would be coming all the way back to its breakout. So I would say be caution as we speak right now. Okay?
Thank you so much.
My pleasure. Thanks for listening. Thanks for calling. That was Suzanne in Windsor, Canada out here. If we switch over and take a look at the weekly chart here for the GDX, big reversal session out in the market yesterday inside the XAU, inside the gold miners out here. The weekly chart shows that it has certainly broken out above the resistance levels of its market profiles, but suggests that pulling back and testing that area of 2467 would not be out of the ordinary. Now, on a weekly basis, what the GDX is doing, it's made a 100% move of a move. That means it's gotten all the way back to the swing point from March the 10th. Now, March the 10th, volume of 195 million shares out there, and this week 170 million shares. So what does this do on a daily basis? Let me just switch back over and see what it does on a daily basis on average out here. 40 million shares. So, it's pushing into that swing point with the volume out there. So on the weekly basis, it looks pretty good. Again, the daily chart has given us a signal to be cautious out here. We'll see how the GDX behaves. Now, the key with the GDX is this. Let's go take a look at the market profiles for gold out here. The key with the GDX is that it's going to track from a directional standpoint what goes on inside of gold. And if we take a look at the market profile here for gold's off about $3 or so this morning, and we take a look at the daily market profile. Let's go ahead and put that up right here. Now we'll go ahead and expand the screen for you. And we're going to look for the areas of support and resistance as well out here. So this is broken through its consolidation. It did get above the swing point, no question, on from July 1st. At swing high was 1334.90. You're trading right now at the 1336 area. So yesterday was a breakout above that. Makes that 1326 level, 1326.60 to be exact, an important area of price. Ducks its head back in there. Then what it says is you're likely to see gold pull back into about the 1299-ish type area. So we definitely want to be paying attention to it. And I know that I am in a small minority camp here at TFNN with regard to gold and the way that I see it. But what I also see inside of gold, we'll go take a look at that stock chart. I shared this earlier in the week, and I'll be curious to see I don't know if I'll look at it today at 3:30. I'll certainly look at it tomorrow. But what I'm going to be looking at is the CFTC data, the Commitment of Traders data for the commercials out there. And I'll put this up on my screen here. I'm going to pull this back. And, the commercials, they're the large money traders out there. They're what's referred to as, we'll call it the smart money. And the smart money here, when we take a look at gold, they have been ramping up their short positions in a large way, not a small way, in a fast, accelerated way. And what that says is that the large commercials are looking for some kind of retracement inside of gold. Now, do they always get it from a timing standpoint? Do they always get it? No, they don't always get it right. But, boy, that's the big money that is out there that's being pushed around. So I'll be very curious to see how, are they continuing to ramp up their net short positions out here. And if we take a look, if you're watching us on Tiger TV and you're looking at this weekly chart here for gold, what you are going to see, unlike silver, if you take a look at for gold, you come back to the swing point high. That's on the trading session here of October the 5th. That's up at 1798. If you take that as your touch point from a trend standpoint, and the high, this key reversal session, by the way, on a weekly basis inside gold, that was from March the 21st. And you can see that if you look at the bottom of my screen here, you can see that on that trading session, you can see where the large commercials had their net short positions as well. And right now, they're at higher levels. And so the break of gold of this trend line has not been with conviction. And that's really the one that I want to be focused on and paying attention to, is what's going on with gold, more so than silver out here. And as I say, I'll be very interested to see what the large... And hey, here's the deal with silver. With silver, the large commercials have done the same thing. They've ramped up their net short positions out here. And I recognize there could be some selling forward of futures, but they're ramping up their net short positions, and that is a pretty large message for us when we take a look. And so then yesterday's key reversal inside of the XAU, we go take a look at that out here. Let me put the index on my chart Let's do that. And we take a look at the XAU. Here's the key reversal session. So what do we know about the XAU? You know, it was making a 100% move of a move. What does that mean? That means that price made it all the way back to its most recent swing point where we saw a significant change in trend. That was from the trading session of March 14th. When markets do that, what they often do is they often do something else. They move sideways or they retrace out here. And now look, last time that there was a key reversal session inside the XAU, it was a trading session of June 24th. And what you'll notice here is that the low was never taken out. So in that case there, that key reversal session didn't mean a whole lot. In this case here, the low has not been taken out. So I would say so long as the XAU is able to stay above 101.29, then yesterday's message is nothing more than, hey, it got up to this level and we saw some profit taking out there. But if it does goes below that level, then that sets up a retracement. And inside the XAU, that retracement, just a normal retracement, well, I got to grab the right swing point out there. Just that normal retracement takes us to about the dead cat bounce 0.382 level, 97.33, maybe even 91.98. Right now, things look okay, but we need to be cautious with regard to that signal out there. Let's go take a look at what is moving in the marketplace here right now. Let's take a look at, to the upside, you've got Amazon up $11. Let's go see what Amazon is doing. That's trading out at $339. That is trying to get above a support resistance level of its unfair high. So 335.51 is a key level for Amazon to get above. In the case of Amazon on its daily chart here, its most recent swing point was from about 4 trading sessions ago. That was on June the 9th. The high out there is 18. I'm sorry, the high out there 18. The high out there is 340.72, 18 million shares. Yesterday, Amazon was moving up with only 10 million shares. This morning, it's done 13 million shares. Amazon is going to go ahead and take out a swing point here. Let's go see what else it is trading into. So let me pull this back a bit. See what Amazon is doing out here. So it's got this volume. So Amazon's going to go make a run for that trading session, looks like from January 27th. The low of that trading session is 357.76. We'll see how it can handle price as it gets, if it gets above that level. It's got some volume in it today. Again, needs to close above today 335 in order for it to go ahead and make a run and get clearance from the tower, so to speak, to be able to run up to the 357.76 level. That's AMZN is the ticker symbol. We've got Whirlpool to the upside. WHR is the ticker symbol. That's trading up 2% out. But let's go see what it's actually doing out here. Now, what a heck of a run Whirlpool has had off of the lows back here. Again, it's a daily chart that we are looking at. It is... This has not had a change in trend. If you take a look at the signal box profiles on here, the green, blue, and red horizontal lines going across my screen, you can see that Whirlpool started to begin changing its change in trend out here, and it was giving us signals, a couple of combined signals out here. And what I'm going back to is the December 23rd time frame out here. If you take a look at December 23rd, you can see that price, this had formed two dojis in a row. These two candles here, this one from January 6th, that's really a high wave candle. We're going to give January 13th a high wave candle. Small-bodied candles, nonetheless. And up at highs, that's a problem. That's telling you that the market has lost steam. And look what it did the very next trading session. Bearish engulfing candle, that was on January 20th, came back and broke through the green line, the green horizontal line, the unfair low, the support level. Price did what? Price had a little bounce, and it got right back to what? Got right back to an old resistance line. I'm going back to this one here that was in place in February time frame, and that has held as a level of resistance out here. So you're beginning to see a change in trend. That change in trend will be confirmed if Whirlpool moves below the swing point from February 3rd. Again, it's a daily chart we're looking at, and if it moves below there with more than 11 million shares, now let's go look for a volume session and see where Whirlpool would likely pull back to. And the problem here with Whirlpool is that it could pull all the way back to the trading session from October 22nd, 2012. That would put it in the range of 97 to 85 out there. WHR is the ticker symbol. Let's take a look at to the downside out here. Let's go take a look at Rent-A-Center Inc. It looks like they're not renting enough through their centers out here. This is down pretty hard. Down a total of 11% this morning off $3. I want to see what their numbers look like out here. It doesn't show me. The exact numbers I want to look at. Nonetheless, let's go take a look at the Rent-A-Center. Let's go try to figure out its message of the markets. This thing had moved down with some volume right back here. It's going after this swing point area, which was from January 27, 2014. Type of volume to the downside this had was 14 million shares. We've been trading for 17 minutes, and this has already done 3 million shares. It is going to go attack that area. Looks like this could be a huge A to B equals CD to the downside out here. I'm just seeing if there's any signs of support out here. Let's go take a look at that A to B equals CD pattern, that lightning bolt pattern. Your A point out here is going to be the swing high from August 5th, 2013. The actual swing point isn't the one that I was looking at that had the volume. There's a couple trading sessions after that. But as a benchmark, we'll go ahead and use that from a volume standpoint. The swing point is actually going to be February 17th. February 17th. And then your C point is going to be the trading session from April 28th. 1-to-1, A to B equals CD. If you see Rent-A-Center close below 23.65, looks like that'll target the area of about $13. $13.33 to be exact. Ticker symbol there is RCII. Let's see, also to the downside, we've got Fastenal, F-A-S-T. That is trading off about 5%, down $2.40. Let's go see what Fastenal is doing. Again, this is a daily chart out here. There's two showing significant resistance that it has not been able to clear. Now trading below an unfair low, going after a swing point from February 3rd. So interesting here. That swing point has 19 million shares. Today it's done 11 million shares. It's going to be taking out the February lows out here. Where does that take us back to? It takes us back to a swing point from June of 2012. So just imagine that. In a period of just a few trading sessions, look like Fastenal, F-A-S-T, is going to be pretty fast and get all the way back to June of 2012 out there. Very, very interesting. Let's go take a look at the ETF structures out here for the indices. Let's do that for you. Right now, you've got, all I have to do when we get back from the spring. You've got the Dow's off 46, S&P down 5, NASDAQ Composite off 4, Russell 2000 down 5 out there. VIX index. Where is the VIX index? Above the 50-day exponential moving average. That's for sure. Not good if you're a bull. Correct.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. We've got the Dow's off 37. S&P is down 3.5. NASDAQ is slightly unchanged out here. Russell off 4 points. Let's take a few minutes. Let's go take a look at the ETFs for the indices out here, see what they're doing, try to provide you with some parameters to be focused on. Let's start off with the strong indice. That is the Qs, the QQQ ETF. It's got a little support level that it's been able to hold for the most part, and that's at that's priced out at 94.42. That's its market profile low out here. Close below that, depending on how much below that, is a little bit of a bearish sign out there. And really, we want to be focused on the Qs for sure, the NQ out there, the NDX 100, because that's going to that'll probably go ahead and take us down. Now, the first element of the market to take us down, that's been in the Russell 2000. So let's go change over and take a look at the IWM. You get the Qs to participate, and it probably is a fairly fast market to the downside out here. And we take a look at the IWM, what we know about it is that as we pull this back, is that the IWM made a nice 100% move of a move. That means it got back to the 120.58 area. That was a swing point high. That was a high volume high, by the way, that's been tested. The interesting thing about high volume highs, and I'm not saying this is going to happen, but when high volume highs do get tested and they fail, price does not ever have to go back up there. So kind of an interesting thing. That's not what I'm suggesting, but I am saying that is a chart pattern, and I would be remiss if I didn't mention that to you. We can see here just simply from a, let me go ahead and delete. Let me just clean off some of the lines out here on my chart. Let's do that. And let's clean this up. Just clean it up just a bit for you. Make it a little bit easier for you to look at here. So now we take a look at the Russell 2000. Number one, if we take a look at retracements or what it's doing right now, trading below its unfair low, its support level, 116.54. It should have held that area. It has not. If we take a look, so that's showing us a change in trend because on the way up here, those levels have held. So now that probably becomes resistance. If we take a look at retracements, we're going to begin with the hammer candle low from May 15th. Oops, didn't mean to do that. We're going to do that again. Oh, geez, forgot to turn that off. Suspicious items have been detected. How unusual is that from an email system? In any event, we take a look at retracements. It's below the 0.382 level. That's 115.80. And the 0.618 retracement level, that's at 112.61. So the IWM looks like it's headed for 112.61. But the reality is this has been trading in a consolidation pattern for quite some time. And we're talking really the consolidation pattern began back here in February 5th. So it is more likely going to head to the bottom of the consolidation versus just make a 0.618 retracement level, make a 0.786 retracement level. That says the IWM had to head down to that 107-ish type range out here until we see a change in trend otherwise. If we take a look here at the SPYs, the ES mini key level to be watching today is 1953. It closed below that. Is not necessarily a good thing out here, but let's go take a look at the SPYs. Down 22 cents right now, trading out at 196.14 or so. The SPYs have not broken down. They just simply haven't. But a close today below 195.20. Starts to get it back with inside its signal box out here, and that says it ought to seek 193.46. That closed below 193.46, and the SPY will have changed its character out there. But at this stage, that is not the case. And let's go take a look at the diamonds, the DIA, see what that is trading out at. Looks like that is off about 38 cents, down about 0.2% out here. The diamonds ought to find support at 167.40. It closed below 167.40 out here. Not a good thing. Well, folks, it is Fantastic Friday, and that means the show's over. So it means you're going to have an extraordinary weekend. As always, thanks so much for joining us here at TFNN. I'm going to fill in for Tom today during the Nadex Bull Bear Binary Option Hour. So stay tuned for that. If you're off to start your weekend, I look forward to seeing you bright and early Monday morning. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.